Okay, welcome all you vendors here. It's good to have you all. Yeah, we do have a couple agents on. Let's see, nope, yep, just maybe 2-3 agents, that's it. So, but we're gonna go ahead and run this like we have 50 people, so. All right. Let's see. Jen, are you there? She's there, but she's not there. Okay, so we're gonna continue with our ninja tradition of doing gratitudes. So we were wondering if anybody wants to share something that they're grateful for that happened to them this last week. Anybody online or here in person?
I will.
Okay.
I got to attend ninja training for the first time. I'm just really grateful to Jen and Presidio for bringing it here, because in the past people had to travel. And I've done a lot of training and it was the best I've ever taken.
Good.
So I highly recommend taking that in the future if you haven't and you get a chance.
I would agree. It is some of the best training. It's long, 4 days, and it's not CE, but it's worth it. It's worth it to boost your business. Okay, I appreciate that. Thank you. And you were newly elected to the board of directors for Utah County Board, right? Congratulations. Okay, if that's it, anybody else? Okay, the broker moment is just talking about the seller property condition disclosure addendum. If you're going to have longer explanations than that box provides, this addendum is used to do any clarifying. So keep in mind that that's what this addendum's for, and to keep it updated. It also is if there's any updates that the seller has to do while it's under contract, you use this addendum to notify the buyer of the updates. Any questions on that? Okay. All right, we have our upcoming classes. Shauna Shirtliff from Bolt Credit Services is teaching tomorrow. Is that right, Tana? Okay, cool. And is that live or is that going to be on Zoom?
Live and Zoom.
Okay, is it going to be in PG? Is she coming here?
Yeah.
Okay, sounds good. All right, congratulations to our weekly closers. This thing is just in the way. Whoops. How many were there on this? I can't see it. 50 something. I don't know. It's pretty close. 50 something closers again. We're still crushing it. September was, I think, the best month we've ever had as a company for closed transactions with all our agents. So congratulations to everybody. It was amazing.
A lot of two-time closings too.
Yeah. Awesome. And congratulations to Taylor Woodbury for capping. So that's a big deal. And we're going to move right through all this. Okay. Let's go ahead and start with Karen. Karen, you were first here. Come on up in front of the camera. Karen's with Traveling Title. So no, that's okay.
Okay, hi, everybody. Once again, just a reminder that we're here. We go to you, we go wherever you need. I also am the expert online person. I have 1 o'clock today. So if you have any investors that are interested in not going anywhere, especially out of state, that helps a lot. Sellers big time, because they just log in. Literally, I have them signed and done with docs forwarded to them within like 15 minutes. So it's amazing.
Awesome.
Call me.
Thank you.
I'm around.
Thanks for being here.
Thank you for doing the online
I
closing.
do not charge extra.
Okay, Patrick, you want to come on up?
Thanks. Appreciate it, Steve.
You bet.
Just again, thank you for, supporting HWA, killing it on the closings. That's awesome. Just want to remind everybody that protect yourself and your clients. Remember to get those home warranties. We offer free warranties for sellers. I can't emphasize that enough. It's not being utilized near enough. This is a great value add to the things that you do for your clients. It is free. If the buyers choose not to get home warranty from us and we pay out claims to the sellers, nobody gets charged for those services. It's all covered in the coverage of the warranty. Obviously, we'd like to have the buyer coverage put in play. And when that conversation comes up, you can get me involved in it. My phone rings, I answer it. I'm always there for you. Thanks, Pat with HWA.
Thanks.
Yep.
And then you use that addendum we talked about, right? So that's how it works. All right, Paul. With Lunetta.
All righty, congratulations to all the weekly closers. That's awesome. I just wanted to share with you quickly today. I talked for a moment about pre-approvals. I did receive a call about 5 minutes before I walked in here from a listing agent asking about an offer that is looking to consider to accept and wanted to know how solid the borrower or the buyer was. And I told her exactly this. I said, hey, this borrower is solid. When we have somebody come in and we give a pre-approval out, we get all documentation and everything. We run it in, we run the whole file through what's called our automatic underwriter. And it tells us whether they're qualified or not. So when we give a pre-approval, we know they're solid. And so the last thing you want to do is when you go out and finally get an offer accepted for your clients, is to find out they're not really approved, they can't fund the property, right? And so when I was talking to this listing agent, I said, hey, so that she's ready to go, she's solid. Do you know when you're going to accept that offer? Or your seller's gonna finally make a final decision? He goes, actually, you just helped me make the final decision right now because we were just wondering about the funding. And because you told me you did the automatic underwriting, she goes, we're gonna accept that right now. So it's awesome. So just want you to know that when you bring your clients in, we ask for full documentation. So when you put them in underwriter, we know whether they're going to be qualified or not. So there you go.
Cool, good job. That's awesome. And their system is easy. I filled one out for me to buy a second home and I love their system. Step by step, everything was simple and all online. So it worked out great. So I really was impressed with that. Okay, Amy, are you online?
I am. Thank you. I'm going to jump on the bandwagon and say congratulations to all the agents. 53 closing. Amazing. Good job. I also want to talk about water. So we all know our home is surrounded by water, whether it be in the pipes or underground. Water damage from the backup of drains or failed sump pumps is one of the most common homeowner claims and the third most costly you'll have. This coverage is often referred to as water or sewer backup. It provides coverage for clogged sewer lines, backed up drains, and failed sump pumps. And it is not typically covered in your homeowner's policy. People don't realize that. It must be added. And generally, it's only like $50 a year, which is much less than the typical average $25,000 to $5,000 repair. So if you are, especially important if you are buying or helping your sell or buying a home with a sump pump in the basement, it is not covered on your homeowner's policy. This is a really important coverage. You just want to make sure that your policy or mention it to your clients that it's included. So thanks.
All right, thank you, Amy. Okay, Jen, did you have anything you wanted to add?
Nope, sorry, I was stuck on the phone when you were calling me, but no. Glad to see everybody. Excited to hear about Max's stuff today.
Yep, and good intro to Max. Max, come on up. So Max is with Savvy
That's right.
Homes, is it, or just Savvy?
Savvy, so Savvy co-ownership, that's funny. We're actually looking at getting a name change soon, so we could be something different.
Okay, so for those of you that are here to attend our class, they've got a great product and it's something that I hadn't heard of till this year. And it's very interesting and very doable, which is what I like. And so I'm gonna turn the time over to you.
Yeah, absolutely.
Okay.
So I've got a slide here too. I don't know if
Yeah.
you want it to, am I, okay, there we go, yeah.
You can share screen. Okay, good.
Perfect. Thanks for the intro, Steve. So yeah, I'll quickly go over what we have to offer here at Savvy. Hold up. So Savvy, we're super excited about what we've done. Just to give a brief background of what we are, we'll go through the slides and I'll go ahead and do that, and we'll present. But I'm Max, I'm the account executive over at Savvy and also Real Estate Pro, and and also an agent with Presidio. So we're constantly raising the bar. So what Savvy is, it was the brainchild of a lot of tech guys over here in Lehigh, some of the bigger names from Podium, Qualtrics, Vivint have now started Savvy. So we've ventured backed by some of the bigger names also from Vivint, like Todd Peterson, and getting this started. And we've been going for about 3 months, and it's just been amazing. We've gotten almost 4 homes sold in our co-ownership model, and looking to expand across the country. And we want to work closely with agents to do exactly that. So yeah, just to give a brief explanation about what Savvy is. So here we have a second home, a vacation home. For many people and buyers, especially in this market, they're not wanting to compete to find a second home if they can even find one. And so it might make sense to them, rather than tie up $2 million, to spread that dollar even further. On average, we've seen that buyers, when buying a second home, only spend about 4 to 5 weeks in that home. The rest of the year, they're feeling guilty not being in that home. They're worried about when they get there, okay, I gotta mow the lawn, I gotta fix the roof, I gotta change the stove and light bulbs and do all that. So that's the gap that we've seen in the market and the gap that we're looking to fill. Savvy then says to that buyer, all right, let's buy this home for 1/8 share. You get 6.5 weeks, 45 days in the home. Schedule your time via the Savvy app. And then all you have to worry about is showing up and having the time of your life at your high-end luxury vacation home. So for instance, too, on a home like this, it'll be $2 million. You can get a 1/8 share for 200,000, 150,000 for that 6.5 weeks, the same amount of time statistically that you would use the home if you owned it outright. So, and then Nick too, he'll talk more. He's the broker at Savvy, but we'll just also go into agents and how we want to work with them. So the other thing too, we want to work with agents. When you guys succeed, we succeed, the buyers succeed. So there's a win-win-win when showing your buyers a Savvy home, and it's as simple as you want it to be. So. How close you're wanting to stay with your buyer will just depend on you. We don't expect you to be the Savvy experts, but we want to help you in the process with helping your buyers. So whether you want to come in to our office, it's totally fine with us, but we'll pay a 3% BAC on the transaction, and if you're selling, we would love to work with you on that as well. But it's as simple as that. So we'll go through that. Nick, if you want to come up here too.
Great.
Yeah, this is Nick Barber, the Savvy broker.
Hello. I'm more savvy on some days than others, but we're happy to help out. So you got through the
So just
commission portion?
Yeah, the commission
Okay.
side of things.
Great. Yeah, we love our agents. We are not trying to disrupt the market and cut agent commissions. We want to pay you a full 3%. In fact, one of the homes we're just closing out on right now in the Coral Canyon area, we're offering a 3.5% BAC. So you just don't see that anymore in the market.
Right.
But yeah, to just kind of give you a quick overview of how it works. And let's see, okay, I can see here a little better. So Savvy fractionalizes. We really don't use that word because it's got the bad connotation with timeshares, which we are not a timeshare. This is actual fee simple ownership into an LLC. So we find a home. They're usually very high-end luxury homes. Sometimes they're pre-existing homes we buy from buyers. Sometimes they are new construction and everything in between. So we find the home, then we form an LLC ownership group. So when you buy into this, you buy into the ownership group. And there's a couple of reasons for doing that. One, that allows you to come and go as you please. So you don't need the authorization from another owner in the group. You don't need them to approve who you're selling to. It allows for kind of a slick transition. It also allows us to create an operating agreement, which kind of has the rules of engagement of the home. So make sure everyone's paying their monthly portion, make sure that no one's throwing raging parties, and you're stuck with the bill. In fact, if that were to happen, Savvy actually will cover it in the ownership group. You won't even probably know that it's happening, but Savvy has your back on that, which is really an awesome option. From there, as Max probably talked about earlier, and I apologize, I was on a phone call out there, so I didn't hear his portion, but paperwork and closing. We take care of the entire contract. You won't have to deal with a REPC when you're working with us. Once a person makes a deposit, we release that contract via a DocuSign system. and they're able to review that. Now, we recommend that their agent takes a look at it, their broker, their attorney, their priest, whatever, whoever wants to look at it is welcome to look at that document. We welcome people to question it. We welcome them to come into the office and talk about it. So that's how that works. So you're never gonna have to deal with a rep seat, not gonna have to go through a four-way walkthrough. It's literally going to be the easiest kind of commission that you really should ever make in your career.
Right.
And then how we separate ourselves and how we've streamlined this is we use our proprietary app. So it's a mobile app, which will allow you to do all the booking. On there, your owners will log in. We have metrics set up to allow for equitable bookings for all owners. So whether you're number 1 or number 8, we're going to have an equitable option for that. We also take care of everything, start to finish. So once you own, our goal is that you book your stay, you enjoy the heck out of the property, you check out and repeat. You're never going to have to worry about repairing a hole in the wall, or let's say a cushion got damaged on one of the couches. You may need to submit a repair order to us through the app, but then after that, we take care of it. We line up maintenance, we line up, we pay the utilities. Then once a month, you get a bill for the 1/8 or 1/12 portion, whatever it is. So then you just need to pay it. So we literally take all the pressure points. We line up the cleaning, again, repairs, work, anything like that. We not only pay the property tax, we also pay the homeowner's insurance for you. In fact, at the end of the year, we provide you with a K-1 statement for your tax professional to take care of. So literally you get in, you book, you enjoy it, you leave. We take care of the rest.
Yeah, and what Nick touched on briefly too, that I'll just hit on that, is not only are we're handling the process of owning a second home for you, but also when it comes time to sell, this is also the thing that people, a lot of buyers love about the model, is they can sell and then realize the equity gained in that portion. It will follow, a certified market analysis, and then market willing, get that equity gained in the home. So then all of a sudden it just starts to make sense in that realm for investment minded buyers. We're not selling securities or anything, and obviously as real estate agents, that, but it's a great place to hold your money if you're wanting that second home rather than tying $2 million in the home like we talked about. So let's just, we'll also briefly keep it going, and then we'll also answer questions that you guys and the people here too at the end that we, questions you guys have at the end. So this is just a brief overview too, quick glimpse of our website. You can send your buyers here. We would love to send you guys a brief price breakdown of each home that you want to then transition to your buyers. However you're wanting to work with us, we're happy to accommodate. So then you can send your buyers here. It's as simple as saying, okay, I like this home. Let me schedule a time to go see it. I'll call Max, I'll call Nick, and then we can get that ready for you. Submit a deposit and purchase the home. It's really never been simpler too. And that's what we love about the innovation and technology we're bringing into the market. Going along with that too, like Nick talked about, each buyer will have their mobile app where they'll see everything about their second home, a time to go and use it, a last minute stay. If they're wanting to send the grandkids, the in-laws to go hit a couple balls over at the golf course, they can absolutely do that. And they don't have to be there to have to send them to go use the home. So everything will be done through the app, payments, and everything streamlined and simplified right there in the Savvy app. And then Nick too, we can both touch on scheduling.
Sure. Yeah, so scheduling, this is probably the greatest beast in co-ownership. Previously scheduling went through Uncle Bob, and he usually took the best dates and then gave everything else to everyone else in the home. So we've taken, again, that pressure point out. We are Savvy, so Savvy is going to organize all this. In fact, one of the beauties of this model is you can have complete anonymity with the other owners. So you can be known as owner number 1, or you can be known as owner Max Biegel. So that's a really nice part. So you never get into those kind of head-to-head confrontations with other owners. So when it comes to scheduling, you can see, and I don't know if they can see on here, but as you look at the flexible scheduling, we'll just use a 1/8 share. We allow you to schedule up to 6 stays. Now that's over a 104-week revolving calendar. The reason we do a 2-year calendar is we want you to schedule those stays. We also want you to be able to schedule out in the future. So if you had a family reunion that you want to have at your house, wanted to schedule it out for the next year, you'd be able to do that. But what that also does, it creates white space in the calendar so that you can pop down on a short notice stay so that all the weeks aren't already booked up. That's one of the best parts of having a vacation home is, hey, my week freed up. I'd love to go try to pop down this weekend, or hey, let's take a look at the calendar. Is it open in a week or two? So we allow you to do that. We also make sure on the 1/8 share that you get at least one high priority date. So a holiday, spring break, fall break. We actually recognize 14 different dates as being high priority dates. So with the 1/8 share, you're guaranteed one, most likely you're going to get a second one as well. And those will rotate. So for example, if you got Thanksgiving this year, you would not be the high priority person for Thanksgiving next year. We want to make sure everyone gets a chance to enjoy each of the holidays. We also have a 14-day max stay length. We do that so that our snowbirds don't just camp out during the wintertime and book all that time. In fact, when you book for 14 days, then you cannot book for another 14 days. Again, we're trying to make sure people don't block large sections of time. And then on this 1/8 model, you get a 44-night stay. We also have a provision too for no notice stays. Let's say, again, you just pulled that calendar up to see if it was available. You can actually book within 1 to 7 nights without it counting against one of your scheduled stays. And you can just pop down and take that. Now you can even do that if it's open and you've already used your 44 nights. What we do there is a cost per night of $100. Now, most of our homes, if you were to Airbnb those, it'd be anywhere from $1,200 to $2,000 a night. So that $100, when you exceed that max time, actually goes into the repair reserve fund of the house, which is great. So all owners actually benefit from that. We definitely want these homes to be used. We want it to be stress-free with the app, and we just want people to start creating memories with their families.
Yeah, exactly. And that's honestly been the greatest part about being an agent. I don't know about for you guys, but to see someone buy a home, it's one of the biggest purchases of their life. And then to buy a second home, create memories that honestly last forever with their families. And so it's something really special that we get to do as agents. Something that I love to mention to agents is not only can your buyers have a 1/8 share, they can get up to half of the home. So that also, like Nick was saying, gives you more holiday stays, gives you more time at that home to create those memories and enjoy the time with your family.
It'll also increase your commission.
Yeah.
So, this is one thing that I know from an agent perspective. If my client says, look, I've got $1 million budget, and then they find a savvy home that they can buy into 300,000, my agent brain's going off saying, well, geez, there went 2/3 of my commission. Well, it doesn't have to be that way. They can buy, as Max said, up to 50% of the home, which is going to give them more time. They're still going to save a ton of money by not spending the full $1 million on something, and you're going to get that full 3% commission.
And that's the cool thing about like explaining this to your buyers is not only is that a value added for you as an agent, this is something that's frankly pretty new in the market. So you're like, okay, I know you were thinking about buying a $500,000 vacation home in St. George. Here is a $2 million vacation home. Why don't you put your 500K here and, not only get more bang for your buck, but have a much nicer home in the process.
Absolutely. And another neat thing about what we're doing is we're not just a Utah-centric company. We are, as Max probably mentioned, we're venture backed. We're doing a Series A funding where we're raising over $20 million, which is going to catapult us into other markets. So we're hoping within the next 6 to 12 months that we'll be national in Florida, California, Miami, or Hawaii. So you could, instead of spending that $1 million or 500,000, buy a share in Utah, buy one in Maui, buy one in Florida, and you're still paying less than you would for one exact home and be able to use that. So and now's a great time. We'd love to answer any questions that anyone might have. It's very complex. Again, we don't expect all agents to be experts on this, but go ahead here in the class.
Yeah, so Max and I talked a few weeks ago, I think it's been a little bit longer, but are there any options for financing?
Good question. Do you want to hit that up?
Yeah, great question. We hope to have financing in the future, like we talked about. And in full disclosure, I mean, we have nothing to hide. We're a startup. So we're hoping to have internal financing in the future once we get that Series A funding, to be frank. But right now it's cash buyers. That being said, the market and being so hot right now, haven't had a problem finding cash buyers, frankly. There's just, and with the cost being so low too, because I mean, our lowest is 132,000 for a 1/8 share, which is you just don't see. So a lot of people thinking, okay, I'll put this into a 20% down payment, whatever it is. I'll just buy the home outright. So we don't have financing right now. What we have been also recommending is a HELOC, to get those funds on their end because interest rates are so good. And then also splitting a 1/8 share is also something that's been helpful for a lot of buyers between friends and family. On our Savvy app, they'll have separate logins to either schedule with each other or separate from each other to schedule their time. But we're happy to work with buyers in that process. We'll make it simple and easy, frankly.
Yeah. In fact, we've established some really good connections with some of the larger banks and credit unions in Utah to help with that HELOC process. Historically, it's been about a 2-week process, but where it's so busy right now and interest rates are so low, it takes about 3 weeks. But we have connections with Zions Bank, UCCU, Mountain America Credit Union. Yeah, go ahead.
So it looked like on one of your slides that it showed that if you buy like a quarter or a half, they do get longer block.
Yes, yeah.
And so if somebody does that, are they then allowed, or is it against the rules for them to then turn around and sub-rent it out during that time frame?
Yeah, and the simple answer to that is we do not allow for nightly rentals in our homes. So they're very high-end homes. Also, especially in the St. George market, and you're seeing this more nationwide, is municipalities are really cracking down on those nightly rentals. It's also really nice because we get around, I don't know if that's the right term, but when you're in an HOA, there's usually provisions saying you cannot nightly rent, or if you're not in a certain area, you can't nightly rent. And we get around that by not allowing that. Co-ownership is different, so we don't have to worry about that in that aspect. But yeah, it's a great question. It's probably our most commonly asked question, can I nightly rent this out? And again, the answer to that is no, but like Max touched on, we do allow you to let close friends and family use it, if you're not able to get down there the whole time.
Yeah, and going along with that too, Steve, I think historically people that are, if you're looking for a cash flow, if that's your business, then yeah, this might not be the right fit for you. But then if you're looking to offset your initial costs by renting it out, then all of a sudden when those buyers that come in, they're like, oh, well, this is a no-brainer. I don't have to worry about being a full-time property manager anymore. I'll just buy an eighth of the home, and then that's what I'll use. So we've actually seen great feedback. And then the owner is actually in the home when we tell them like, hey, you can't rent it out. We're actually seeing the response of like, great, I didn't want to have to worry about holes in the drywall or damage to the furniture or anything like that. And so it's been interesting to see that response.
Good. Yeah, that's my point, is it's not for short-term rentals at all. It is for you to have a second home to be able to go to and not worry about maintenance or cleanup or anything like that.
Or raging parties or bachelorette parties where there's 40 girls there. We heard a story from one of our owners. Yeah, right here and then back here. Karen, yes, thank you.
Okay, what is your typical closing timeline?
Yeah, no, that is actually a very good question because these are a little different than a standard real estate transaction. So again, we're dealing with cash, which is a shorter time. We actually, each individual owner does not attend an actual closing because when you're buying into an LLC partnership. So there's no closing actually required when you purchase these. That's another way that we streamline this process. Now, when we close on a home, there is a closing that takes place. Once we've closed on the home, then we transfer the ownership to that LLC group. Ideally, we do not retain any sort of ownership in that group. So when you become an owner, you actually own that property, not Savvy.
Okay, do you have to wait until all the ownership is sold out? Let's say I buy an 8th share. Before I can start using it, do I have to wait until you sell all the rest of those shares out?
The answer is no. So typically we try to fill the group like 6 out of 8, and that's when we will either close on the home ourselves or transfer ownership over. We actually have guidelines in the operating documents that say that you can start using it before we even transfer it into that ownership group. So in fact, the Coral Canyon home, we have 2 spots available on that right now, and we've already had 4 or 5 different bookings. Yeah.
What are you saying is a typical monthly fee?
Great question.
Yeah, really good. And that just frankly depends on the home. And the,
With the $2 million house.
so the $2 million
Let's
house
use Coral Canyon.
in Coral Canyon, you'll see the operating cost. And that includes all of the fee, even the Savvy service fee, and that's around $418 a month. So standard like car payment, even less than that in some cases.
That
To own
includes
a
the HOA portion.
Yeah. Yeah, in fact, the breakdown, and we have brochures that we can send on each property. So if it's a 1/12 portion home, that's obviously going to be a lot less because you're splitting it between more owners. But in a 1/8 model, things that will be included will be all of the utility in that 418, all of the utilities, maintenance such as pest control, pool maintenance, landscaping.
The
That also-
repair reserve, the reserve fund for any repairs.
Yeah,
Shouldn't be like major surprise repair bills.
yeah. So what we're doing is every month we're collecting a little bit as that 418 to go into that repair reserve. So in 2 years down the road, and we're also gonna, talking, I'm sorry, what was your name?
Pat.
Pat, okay. So most of our homes, if not all of them, a lot of them are new, so they're gonna have that bumper to bumper warranty. But the ones that aren't, we are going to try to provide a home warranty for these in case anything happens. I think that's better preventative than on the back end. Yeah.
Like if you had one of the homeowners.
Yeah.
One of the owners, they do a raging party and just kind of destroyed the house.
So
Is
that,
gonna be my responsibility?
no, it's not. In fact, I kind of touched on that earlier, and feel free to jump in anytime, Max, but
Yeah.
in that exact scenario, this is what's really beautiful about what Savvy does. If an owner is a habitual, what my dad calls a habitual line stepper, they're always crossing the line. They're leaving it trashed. It's just a bad way. They are going to be assessed for those damages. Now, if those guys are not taking care of that, they're not paying their assessments. Let's say an owner decides they don't want to pay their monthly fee anymore. Savvy will actually cover that. We will place a lien specifically on their portion, not the rest of the home, on their portion, their share. And there are provisions in there to get them out. So we can actually make them sell their portion. Once they've sold it, they satisfy the lien. But the beauty of that is the other owners will probably never even know about that,
Right.
because we actually will front the money for that. You don't have to worry about it. So just another layer of protection with Savvy.
Go ahead.
I'm trying to wrap my head around the ownership type. So I just personally bought a fourth fraction in a Park City property. And so each fourth has a separate tax ID, separate ownership. So I learned how that's working. This doesn't sound like it's a fractional ownership. So you're becoming an operating principal of an LLC.
You are literally a 1/8 owner within that LLC.
So there's one tax ID.
One tax ID.
And so each development you look into, you're making sure corporate ownership is allowed.
Yes, that's
Okay.
correct. In fact, we have had pushback in one development, which as agents, you will find this funny. There is one development in St. George, and if you're in here, you get a free donut, which you would anyway. But can anyone think of a very, very high-end group in St. George, a community down there? Entrada. Oh, great, awesome. So we have a very great, awesome legal team. Entrada does not like our model. And their big sticking point is they say, well, with Entrada, you cannot own in a name of an LLC. How do people buy investment properties? How do well-off people protect these? LLCs trust. So we obviously know they don't have a leg to stand on here. So we actually have a property in that community with one of our investors who does want to do co-ownership there. So yeah, we get around that typically. If an LLC is allowed in the community, then they have to allow us in the community as well. So we haven't had any real issues other than with them, and we obviously know that they're not going to go to all of their owners and require that they take their name out of the LLC. There would be mutiny over there. So
Great question too. And it's cool that you've actually had a fractional ownership
Yeah.
in Park City too. I'll have
Like
to-
for a week.
nice,
Oh,
congratulations.
Cool.
Have you stayed
I
yet?
couldn't find any finance.
Yeah,
Right.
And
Yeah.
I visited with Lunetta and there was no, I visited several lenders
Yeah.
and there was no real financing, but it was a much smaller
Right.
purchase than what you're dealing with.
well, and we're creating a new market space, so people are afraid of what they don't understand. This is going to be very commonplace, and then like Max touched on, we are working with some of the biggest names in Utah. I think he'd mentioned Todd Peterson is one of our financial backers. with a phone call to one of his financial companies, they will issue a quick basic credit check and give $50,000 worth of financing on solar panels. Now, solar panels can be damaged, they can be removed, destroyed. We're talking about real property here. So yes, the writing's on the wall. We will have financing that is going to be coming on board soon, sooner rather than later. And again, Max kind of had touched on it. Once we have a little additional financial backing, then we're going to actually be able to back those shares. And that's really how it's going to work. In a co-ownership, we don't ever want a situation where a lender can come and put a lien on, you know, that property or something to that effect. And that's why we're going to back that.
How do co-owners handle the insurance on that?
Well, that's great. There are actually companies that will allow for LLCs to form and own an insurance policy. And so in fact, there's a local company here called United, and I actually have a 14-year insurance background. So I can speak to that pretty well, but there are certain companies that will allow for co-ownership. And again, co-ownership is really just ownership, whether it's multiple people, as long as they allow the policy to be in the name of an LLC, it's technically ownership.
So would the property be covered under one insurance
Yes.
policy?
Yep.
And each entity, each owner just pays a portion?
Yeah, and we collect that almost similar to an escrow account. So we were kind of going through the things that we collect on the monthly. So utilities, maintenance, reserve repair fund, homeowners insurance, HOA if there is one for the property, in addition, property tax. So once a year, we pay that homeowners insurance for you. We'll send you a copy of the policy. If there are any questions, we review it with you. Or we have you review it with the insurance carrier that offers that, and then we go ahead and pay that. So
the true just, you pay your.
Set it and forget it.
And you just pay your monthly thing and you just.
Absolutely. Yep. Keeps going. You ever have any questions, you have us to rely on. You have our technology to help streamline it.
Yeah, and historically too, that's just been the headache with co-ownership, is you're having to deal with all these people. All right, this is the insurance we're gonna get. You pay this month, you know, we'll figure it out. We've cut all of that out just to really, like Nick said, streamline the whole process too.
So I don't know if you have any properties that are this way now, or if you plan to, but properties that have shared amenities such as like a clubhouse, a pool, golf course access, stuff like that. How is that handled? Keys left there. How does that work?
Exactly. Yeah. So that's what we'll handle on our management side of Savvy too. We're in Desert Color right now. Amazing lagoon, like 2-acre lagoon, something crazy.
Yeah,
right. They're building their own driving range, similar to Topgolf. So that'll be out there. So plenty of amenities too that you have to be an owner to get into. That will handle that with your ownership. Month to month, we'll be paying for that HOA with 1/8 percentage of that HOA. And then you'll have access to go down and use it. And then
you'll have the same access any other owner would. So they treat our ownership just the same as a single owner. So
are these properties on the MLS, either Washington County or Wasatch Front?
yes, they are.
Good.
Yep. So you'll be able to see that. Now the Washington County MLS is quite different than the Wasatch Front one. But yes, you'll be able to find these properties on there. We are in the process of creating the Savvy brokerage. I just passed my test. Thank you very much. And so we're creating that, which also allows us to manage the properties on the back end for you. And the last part of that monthly breakdown. So for example, that 418 includes our Savvy management fee, which is only $150 per month per owner. And again, that gives you access to our tech, our app, the K1 statements, our concierge service. We do everything for you. So really $150 a month for not having to deal with any of those headaches is really a bargain when you kind of break that down. Are there any questions online?
Yes.
I'm gonna make sure we didn't miss anyone over here.
Reach out to my Zoom
Our
buddies.
Zoom folks. Yeah, Beverly, Jennifer. Jennifer already knows she's a pro on this model. So she's going to be an owner sooner rather than later. Yeah, so if there's any other questions, we could talk about it all day because that's what we do. If not, we just invite everyone to try out the model. It's great. We only we only require that the owners own for 1 year. We want to avoid flippers in there, but after a year, you don't like it, go take your money and run. We're going to give you the best platform to try to get the highest amount of money for your property We will blast out things to our database. We create marketing materials for you. We will give first right of refusal to the current owners in the home. So it should be a fairly easy way to get out of it once it comes time to sell.
Right.
So I'll let Max kind of close up, and thanks so much for your time.
Yeah, thanks for having us come out, you guys. If you want to reach out to us, check out our website. I'll be on there, chat. You can just chat in there. Really simple. It's ownsavvy.com. Feel free to reach out. We're happy to help.
Yeah, and the last thing is, if you want to get on our VIP email list,
Right.
you will actually receive priority on all the listings that come up before we put them on the MLS. So if you've got buyers and are interested, we want you to sell them before anyone else. So make sure to get Max or Jennifer or whoever, Steve, your information, and we'll get you on that list.
For sure.
Okay, thanks so much.
Thanks, guys.
Okay, that's it for today. Does anybody have any questions or thoughts? Let me look at the chat here.